Hey, what's going on, y'all? Hope everyone's having a fabulous day. If you haven't gotten a chance to subscribe to this channel, please do so. If you're trying to get an installment loan put on your credit report, I want to show you two companies. I am an affiliate for these two companies, so there are affiliate links in the description if you're looking for these companies, or you could just look these companies up on your own. But I do want to show you these companies because everyone knows I always talk about revolving lines of credit. Revolving lines of credit is going to have the most impact on your credit score. A revolving line of credit is anything that fluctuates. The payment is going to fluctuate on a monthly basis based on your balance. Once you're done paying off the balance, you're still going to have access to that capital. With an installment loan, once you pay off the balance, you are completely divorced from the financial institution. So you're not going to have to keep making payments even when the balance is due. With an installment loan, once you make the payments, you are completely divorced from the financial institution. Now, these two companies that I'm about to show you, I made a video about Self before, so you're going to be a little bit familiar with this company if you're new to my channel. What I do is I always try and bring you guys companies that are going to help you build your credit up. I want you to understand something. An installment loan is going to help you with your mix of credit, and it's going to help you with your payment history. So as you go along and you make payments, this is going to help you build your scores up. So you don't want to just go out and get your secure credit cards or just your revolving lines of credit. You also want to put an installment loan. So if you don't have like a auto loan, a student loans, a personal loan, or a mortgage on your credit report, this is another way for you to put an installment loan on your credit report. And I just wanted to show you guys this. This first company, you guys might have known them as Self Lender, but this is Self. I'm not going to take a lot of time going over these companies. I just wanted to show you guys these companies. Self, with these installment loans, what they do is they put money into a CD, whatever you select. They put it into a CD or savings account. And then when you finish paying off that balance, that's when you unlock your savings or your CD. Okay, for Self, if you look, you have the choice of $25 per month, $35 per month, $48 per month, or $150 per month. Now, I always get people that ask me, Kenny, which one should I do? Should I do the larger balance? Will it help me more? What's going to help you most is the one that you can afford. So never worry about which one is going to impact your score the most. They're all going to have the same impact on your score as long as you're making payments over time. So with a $9 application fee, administration fee is what they call it, you can start an installment loan and you can select, for example, if you select $25 per month, you pay $25 per month for 24 months, and then you're going to get $520 at the end of the 24 months. With the $35 per month, you select $35 per month for 24 months, and you're going to get $724 back. This is just a way for you guys to show financial institutions that you're credit worthy. You can select $48 per month for 12 months. If you notice, once you get to the $48 per month, it's only for 12 months. At the end of the 12 months, you're going to have $539 released to you. And then you have the $150 per month for 12 months. And then it's $1,663 released to you. So this is a way for you guys to show that you're credit worthy. The second company that I wanted to show you guys is called CreditStrong. Now, CreditStrong is the new kid on the block. It's a company that just came out recently. You probably heard of it. You've probably seen plenty of reviews on this company. Just like Self, CreditStrong reports to all three credit bureaus. Now, the pricing with CreditStrong is a little bit different. First, I want you guys to understand what Self does is they put your money into a CD. Once you're done paying off that CD, the funds are released to you. With CreditStrong, they are a bank. So what they do is they put your funds into a savings account. Once you're done paying off your loan term, they release the funds to you. So it's the same concept, but CreditStrong just has a little bit more options. I'm not going to go over in detail all the options. You guys can come here and look at the plan that fits you best. If you notice, they have a $15 per month for 120 months, and your savings account goes up to $1,000. Okay, so this is a 24-month for I guess you can go up to 120 months on these two accounts right here. This one is for $30 per month. It's a subscribe $2,500 account. And at the end, you're going to get $2,500 up to 120 months. You can cancel these accounts at any time. So let's say halfway through it, you want your money back, or you just can't continue the plan. You can get your money back. Okay, so with this account, it's the Build and Save 1000. It's $48 per month. You're going to build credit for 24 months. And then at the end of it, you're going to receive $1,000. And this is at $89 a month. You're going to pay this for 12 months. And you're going to receive $1,000. Okay, so this is a 12-month plan. And as you guys go, I'm not going to go through all these accounts. You can see that they have several different accounts, but I do want to show you something. They have these accounts called Magnum accounts. Okay, now these Magnum accounts, what they do is they put down large balances on your credit report. Okay, so these are installment loans. Let's say you get a Magnum 4,500. What you're going to do is you're going to pay $49.50 per month, and it's for 120 months. But you're going to have a $4,500 installment loan put on your credit report. This one is for $99 a month for 120 months, and you're going to have a $9,000 installment loan put on your credit report. This is $198 per month. This is the Magnum 18,000. So you're going to get an $18,000 installment loan put on your account. You're going to pay $198 for 120 months. And you're going to, like I said, you're going to have an $18,000 account put on your credit report. And what this is going to show you, you can build credit over time. With this Magnum account, it's $18,000 put on your credit report, an $18,000 loan for 120 months. And as you pay, it's going to show you paying off this balance. What a lot of people don't talk about is if you put this $18,000 trade line on your credit report and you don't make a lot of money, chances are your debt to income ratio is going to be high. So if you're going through a manual underwriting process, and let's say you only make, $20,000 per year, and you got an $18,000 account on your credit report, chances are they're going to see this, and it's going to probably red flag your account. So just be careful. Don't pick something that's out of the norm for you. But what you want to do is pick something that you can complete. Okay, because you want to make sure that you can complete these accounts. Even though you can pay these accounts off at any point in time, these are good accounts that you can pick. But let's talk about some interest now. So if you notice with the subscribe 1000, subscribe 2500, these accounts are up to 120 months. And if you look at the interest rate, the admin fee is about $15. So you have a little bit higher admin fee than self. Your loan interest rate is 13.5 APR. And the subscribe 2500 is 7.89. Okay, and these are these are showing if you were making payments of 24 months, this is what your account should look like. Okay, you're going to pay a total of $360, but you only have a progress of 110. So these are really structured that you make the payments over time and you complete the loans. Okay, and your Build and Save 1000, these are up to 24 months. Okay, these accounts 14.89 APR for 24 months. You're going to pay $1,152 into it, but your savings is only $1,000. So you want to be careful of the type of loans that you have and know that you can complete this to the full task. I just wanted to show you guys this so that you guys know that when you're making these payments, these companies are making money off of you as far as interest. The interest is a little bit higher than what most people get on personal loans. But the reality is when you first start building credit, you don't have access to show that you have the ability to pay these loans. So to get in the door, you're going to have to pay a little bit of interest up front. Okay. And I always try and stress that when you're first building credit, it's going to be an uphill battle at the very beginning. But over time, it's going to be easier and easier. You're going to have more access. You're going to have better term loans. But these are just two companies that I really wanted to show you guys so that you guys can get a feel of what you can do to build your credit. Okay, I'm not going to make this a long video. I just wanted to reach out to you guys. I hope you guys have a blessed day, and I'm going to catch you guys on the next one. Talk to you later. Bye-bye.